Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look at the gold market. And the gold market situation is very difficult for analysis because here we do not have some very clear patterns on intraday charts that could lead us to suggest about what really will happen in the beginning of the week. Either the market will continue upward direction immediately, or it will show the two-leg retracement down. If we would have only technical background, that was a bit more simple because on the technical point of view, everything would stands very good. So market keeps bullish sentiment because indeed, if you take a look, so thrusting acceleration here, retracement on the butterfly, this was fast acceleration to the 127, 30% retracement again, rally action with a strong momentum to the upside. A technical picture suggests that we need to take some retracement based on this most recent rally and expecting of the upward continuation. That's what technical picture tells. But at the same time, if you have read our Forex analysis yesterday, the factors that put negative foundation for the Forex market mostly stands the same for the gold market as well. So where we will get the Fed meeting and overall background right now stands positive for the dollar, which means that Fed probably will support the idea of the rate increase in the nearest future. And in the recent week, based on the non-farm payrolls data and inflation, wage inflation, the anticipation of rate increase have risen for 10%, and right now it stands approximately 72%. But a week ago it was about 62%. The sentiment analysis tells that background is negative for the gold market. Speculators and hedgers have closed big amount of the long positions. So that the new shorts, not much new shorts have been added, but the longs have been closed substantially. So as the speculators have closed shorts, as hedgers have closed longs. So it means it's approximately 50,000 contracts have been closed, and as a result, the open interest has dropped. But that doesn't mean that we should treat this as some weaker sign. It means just that as hedgers or speculators do not believe in the nearest probably future that gold market should continue upward action significant distance. Putting it all together, it looks really tricky to say definitely yes, gold market will go up or it will go down. Because here is some contradiction between the technical picture and some fundamental background that is not quite welcome and could bring some unwelcome adjustments on the price behavior on next week. At least it could increase significantly the volatility on the market. So it was really very tricky week, guys, for all markets across the board, not only for Forex, but for gold as well. Another source of the uncertainty is that we do not have clear patterns. So it makes very difficult to make the short-term analysis, short-term forecast. So as a result, there are two major scenarios exist. First scenario, as I said, minor retracement here, an upward continuation, or two-leg retracement on the daily chart. So it will be A, B, C, top, some D action, either to the OP, slightly below the 1211, or it will be XOP, even lower. So as you can see, the major difference between them, so it's intraday fib supports. So for the first scenario, market should hold at some fib support, right, to keep this scenario possible and start upward action. For second scenario, it should break this level. So all story stands about some fib level on intraday charts from this most recent upward swing, and how market will react on this swing, on this support area. So watching what will happen around major supports on intraday charts will tell us what to expect. So it's major key for understanding of the gold price action next week. If you'll take a look at the follow time frame chart, the most recognizable pattern here, guys, probably, as you can see, the reverse hand shoulders at top. In recent times, It happens oftener and oftener on the markets. And you can see that here, as you can see, retracement down, upward action. This is left arm, head, and here the right arm should be formed. It means that somewhere around these two levels, the destiny of the gold market within a couple of weeks probably should be estimated. If market will able to hold here, approximately around 1225 area, and keep the harmony of this price behavior, right? So it means that upward action could continue. At least we could get a kind of the A, B, C bottom, D pattern, if market will able to hold here. If market will fail here and start dropping lower back to these lows, it will mean that probably no hand shoulders will be formed, and we probably will get a kind of the A, B, C, top, D pattern. So that's major distinguish between these two setups. For us, it means that on the hourly chart, we could keep an eye on some kind of the ABCD pattern. If we will get the guideless triple to buy here, we could try to take the long position. But with the early signs of the failure, if market somehow will break below the level that we will estimate, we need to close it fast. Whether it's reverse or not, it's a bit personal, but the fact that it will be closed very fast if market will show any signs of failure here. For that purpose, we will use the hourly chart. On the hourly chart, we have, as soon as market has completed our ABCD pattern, so from technical point of view, as you can see, it looks perfect. Actually, with the bottom, recall that we said, so initially we have planned to take the position in 1211 on some bullish pattern, but here, even hand shoulders has not been formed. Market hasn't formed the right arm and just shows upward actions directly. It's very fast development. So we haven't got even the chance to take the long position on this upward action. So it's straight up forward. So as soon as market has completed this OP target, the sideways retracement started. Now we have a kind of the diamond pattern or something. That's what personally, guys, I actually, to be honest, try to avoid the diamonds because they more often fails rather than works. But currently, it's most suitable shape that we could describe the recent price behavior. Within the diamond, we have the minor A, B, C top pattern. So here OP has been hit at this area. XOP stands, let's take a look at 1226. Also 1227, 1228 is a confidence support. So since this is most strong support that we have on the intraday charts, and it approximately corresponds to the bottom here, as you can see, it means that somewhere in this area, if market indeed bullish and indeed will form reverse hand shoulders, somewhere in this area market should show the upward reversal. So here we could watch for a kind of the guideless triple to buy pattern maybe will be formed, and that's could bring us an attempt for taking the long position. If market somehow will start falling more and break this FIB support in 1221 area, it will probably tell that no upward continuation will follow. And as usual, it's also very important observation. So if you will see that market will collapse here with the one candle down, it will be black, nasty candle to the downside, don't be long. So it will mean that probably indeed the stronger downward action could follow. Unfortunately, guys, that's all that we have right now on the gold market. So keep watching on behavior on the intraday FIB supports. If market will break both of them, we're going down below the 12 and 11 lows. If market somehow will be able to hold here and reestablish upward action, well, it will mean that probably another leg up could be formed. Also be careful in the moment of the Fed announcement, because it really could bring an adjustment on the price behavior, since it's most expectable event on the coming week.